We now turn to Asia's two powerhouse financial hubs, Singapore and Hong Kong. Each plays a critical role in shaping global markets, and their approaches to digital assets are closely watched by industry around the world. Moderated by Rahul Advani of Ripple, we are joined by Chengyi Ong from Chainalysis, Sean Lee from Crypto Council, and Angela Ang from TRM Labs. These speakers bring a wealth of experience across policy, analytics, and advocacy. This conversation will explore how Singapore and Hong Kong are setting the pace for regulation and innovation, and what their choices mean for businesses operating across the region. Over to you, Rahul.
Thank you, Alec, and thank you to the team at DECA for having us here today. Good morning, good afternoon, good evening, everyone. My name is Rahul Advani, and I'm the Global Co-Head of Policy at Ripple. It's my pleasure to moderate this panel on Singapore and Hong Kong digital asset regulations today. And I'm sure you all recognize my panelists who need absolutely no introduction. Today we have the MVPs of Singapore and Hong Kong, Angela Ang from TRM Labs, Chengyi Ong from Chainalysis, and Sean Lee representing the Crypto Council for Innovation. We're going to talk a bit about Singapore and Hong Kong regulations in the global context, touch upon the local landscape, before closing with insights on cross-border collaboration and the future state. So let's get started. My first question is for all panelists. So 2 or 3 years ago, Singapore and Hong Kong were arguably seen as islands of regulatory clarity in a sea of uncertainty. Now, over the last few years, we've seen more regulatory clarity in jurisdictions such as the EU with the implementation of MiCA, the US with the Genius Act. How are these developments influencing regulators in Singapore and Hong Kong to align their own rules? And are we going to see more fragmentation? Angela, would you like to kick things off?
Thanks, Rahul. I think there's a lot of excitement about the Genius Act and everything that's happening in the US, and rightfully so, because it is a juggernaut in crypto innovation. It is ranked 4th on TRM's Crypto Adoption Index. So anything that happens in the US will shape the world. But I think, I think it's important to remember, and I have this conversation a lot with Ari Redbord, our head of global policy, and he also said this earlier on the US section, which is that the US is really now just getting to the starting line of where many jurisdictions, including here in Asia, including Singapore and Hong Kong, have gotten. To that kind of, starting point of having legislation for regulatory clarity. I think that Singapore and Hong Kong has had a huge advantage in the sense that we are now actually deep into the implementation phase. So I think that many of the things that we have implemented, that we're looking at, are in fact also the same principles that are guiding US regulators today. The one thing that I think is important to keep, and I think the US has done very well, is the right tone of regulation. So of course, we are all looking at the substantive rules, how it's implemented, but also I think it's also important how are regulators positioning themselves? And I know Hong Kong has done, a great job of this, being very clear that it wishes to establish itself as a crypto hub. So I think that kind of posture is very helpful in terms of, having a good response to what's happening on the global stage. And I definitely see that across Asia, Singapore and Hong Kong, that openness to engagement, that openness to listening to the industry, and to make proportionate and clear regulations, which is what we've always done. So I think we are actually in a very good position, and I do think regulators in Singapore and Hong Kong are watching developments in the US and around the world very closely, and keeping a positive posture of communication with the industry.
Chengyi, Sean, anything to add?
I guess on my side, from the Hong Kong perspective, the preparation that has been done the last few years, both from a crypto exchange regulation perspective, and obviously now with the stablecoin ordinance coming into effect, It is putting a lot more stability in terms of the overall ecosystem, in terms of how Hong Kong is operating within itself, but also how it interacts with other parts of Asia. The interesting part, though, is obviously given the new administration in the US, there is now even more tense geopolitical tension coming from both sides. And Hong Kong being the gateway to China, and quite frankly, Hong Kong is being positioned as a regulatory sandbox for digital assets from an overall China perspective. There's a lot more complexity in terms of how things are actually being done. So it's not purely just looking at crypto and digital asset and tokenized assets and stablecoin. There's probably much more bigger plays that are in place, especially from a cross-border trade perspective, which we can probably cover in more details later on.
Thanks, Sean. That's a great point. You have to look at the overall geopolitics and the environment within which digital assets are operating. Let's maybe talk about the local landscape now. And Chengyi, if I could turn to you, let's start with a foundational question. What are the key differences in the regulatory philosophies of the MAS and the Hong Kong Securities and Futures Commission regarding digital assets?
I think that's a great question, Rahul. And I think like at their core, these are two quite stringent regulators who probably subscribe to quite similar regulatory philosophies. But if you think about the narrative around it, in Singapore, MAS has always had, I guess, quite a consistent messaging around sort of blockchain good, crypto not so good, stable coins maybe. And that narrative has been in place for years now, and it hasn't really changed if you listen to remarks that are still being made by senior management in MAS. That's still the tone. And so I think, despite that, what they focus on doing is building like quite clear rules and quite clear guardrails around which businesses can operate. The SFC, of course, is in an environment in which, at least broader governmental level, there is policy buy-in to build a digital asset hub, right? Like Sean said, Hong Kong is being positioned as that digital asset sandbox for sort of the Greater China area. And there is acknowledgement that it does include cryptocurrencies, and there is a need to have at least a diversity of product options around different types of digital assets. And I think that sort of broader tone does run headlong into what has always been, again, a very steadfast and stringent regulator that has a conservative risk appetite. And watching how that tension plays out is interesting to me.
Thanks, Chengyi. Sean, let's maybe get a little bit technical here now. And as you alluded to, both jurisdictions have been working on stablecoin regulations. What are the key elements of their respective frameworks, and how do you think they will impact the development of a stablecoin ecosystem in Asia?
So if you look at various different stablecoin frameworks, stablecoin regimes around the world, and there are indeed quite a number of them now, from the Middle East to obviously here in Asia, and also the Genius Act. The one thing that really stands out for both Hong Kong and Singapore is that we do allow for the issuance of multi-currency backed stablecoin. That is very unique. So in that sense, it also plays to both jurisdictions' strength as financial centers within the world. Now, the interesting aspect for Hong Kong, though, is that if you look at the capital requirement for an issuer, it is actually quite indeed much higher than that was stated for Singapore. Now, Singapore has the framework in place much earlier than Hong Kong. So there might be some posturing in a sense between the two regulators in terms of where things are. And Cheng is correct. Both regulators have traditionally been very conservative for all the right reasons. And that has translated also into the digital asset realm as well. And also don't forget, in Hong Kong, we have actually multiple regulators. So while the SFC has taken the leadership position over the past few years in putting together the VATP, that's Virtual Asset Trading Platform regime, the HKMA, or Monetary Authority, is now in charge of stablecoin. So there's a lot of coordination that needs to happen, and that further complicates how things are rolled out, how things are executed, and then not to mention, like I mentioned before, if the allowance of different currency stablecoins, for example, if the possibility of an offshore RMB is allowed to be issued out of Hong Kong, then that obviously requires even Beijing approval from a PBOC perspective. So there's multiple layers of considerations, and it explains why the seemingly more conservative approach. But I think at the end of the day, if we all agree that stablecoins and digital assets are here to stay, then having a prudent approach is very critical. And having the last few years kind of paving the way, there's a lot of lessons learned. And I think the rest of the world has been looking at Hong Kong and Singapore, and in some sense Japan as well, which were also very early in setting up frameworks.
Thanks, Sean. And, is it conservative? Is it pragmatic? I think that's open to interpretation. But the foundational element for both Singapore and Hong Kong is consumer protection, right? And that's what regulation is predicated on in these jurisdictions. Angela and Chengyi, let me turn to you now and sort of pulling on that thread a bit. What are the key differences in how Singapore and Hong Kong approach anti-money laundering and counter-terrorist financing for digital assets? And are their standards aligned with the FATF recommendations?
Yes. I think honestly, AML and CFT is probably one of the areas where Singapore and Hong Kong have more similarities than differences. And these are two jurisdictions that not just want to align to the FATF standards, they want to make sure, that the implementation of these standards is quick and robust, right? And I think it comes back to Chengyi's point about, being very stringent regulators by DNA. So I think, Singapore and Hong Kong, the similarities, I think, start with the fact that they both, I guess, focus on AML CFT when in the very beginning of regulating virtual assets. That was the number one priority. And I mean, this comes back, to the potential and the utility of digital assets being able to move funds cross-border at the speed of the internet. So, from the get-go, both regulators have said that we expect full compliance with the travel rule. We expect you to have in place all the AML CFT safeguards that we also see in other payment service providers. For example, we expect you to be able to have in place processes for doing KYC, and I think. And I think, even going down to the implementation, understanding differences like, how do I verify the ownership of a wallet address, right? That's a little bit different than, say, verifying the ownership of a bank account. And I think those are differences that are very well understood by both regulators. I think there are maybe other aspects, like Sean has touched on, stable coins and even on the custody regime where there are more differences. But I think AML CFT is really one area where we see a lot more similarities.
Yeah, and just to add on, I fully agree with what Angela said. Obviously, in Hong Kong, we still see certain gaps in the AML CFT regulatory perimeter around the sort of the OTC space. And those, are being addressed by the planned regime on virtual asset dealing. So I think, these are, again, both regulators that are striving to hit international standards. I think stablecoins is an interesting area because I think even internationally, standards and expectations in the AML CFT space are being formed still. And the fat of treatment is essentially to say that stablecoin issuers are VASPs, and so they should be subject to AML rules. And if you look at the finalized policy framework in Singapore, it says as much. And there are certain things that it's clear that this means, like if you're a stablecoin issuer, you need to do your entity risk assessment, you need to do counterparty due diligence. I think the broader question here is that, there is a broad recognition that stablecoin issuers have additional controls that can be built in at an asset level, things like freeze and burn functions, and they have the ability to see, what's happening basically as their asset like travels through the wild. And along with that recognition of capabilities comes some sense that stablecoin issuers should have some role in monitoring the secondary market for their own token. But what does that actually mean in terms of practical workflows? How much monitoring, for what purpose? How do you intervene? There's a big soup of questions that I think maybe the HKMA has probably had to grapple with a little bit more since they have their legislation in force. And we've seen like the MA take quite a conservative approach here. I don't know if Sean's got anything to add on this, but I think the overall approach is quite conservative, and that's going to be interesting to see how that plays out in terms of business models and how they scale.
I would use a old Chinese idiom, not old as in very, very old, thousands of years old, but often said enough that the approach here is you're feeling the stones when you cross the river, right? And I think the notion of having assets like stablecoin and others that are running on the blockchain, especially public network blockchains, is indeed an area that traditional financial regulators are still somewhat uncomfortable with, even though the last few years the education level have dramatically increased across the major regulators. But there's still a level of uncertainty. And that's why I think having these measures in place today give them that level of comfort that, hey, if I know exactly where everything is, then the chance of something going wrong is potentially lessened. Now, of course, coming from the Web3 side, the notion of how this technology and this Web3 native kind of mentality was always created to break down barriers, not to put the barriers back up. So it's a balance in between, right? I think everyone is trying to feel itself out. At the end of the day, do we want stablecoin to look more like cash, or do we want it to look more like CBDC? It depends on which direction the regulators are leaning. I think right now they are looking at it more like CBDCs, which means that everything is centrally managed, everything is trackable, and less like cash, which actually have a certain level of freedom, if you think about it, right? So we'll have to see how things goes out. I think we're still in the early innings. If I were to use a baseball analogy, I think we're still early. But once we have jurisdictions like Hong Kong, like Singapore, Japan. I'm here in South Korea attending Korea Blockchain Week. There's talk about one reference stablecoin here, as well as other jurisdictions. And I know Australia is thinking about one as well. So there's going to be much more discussions, especially from a cross-border side, that needs to be put in place. And can you still track everything when a stablecoin goes from one jurisdiction to another? That remains the question.
Thanks, Sean. And that's a great segue to talking a little bit about cross-border collaboration. And I'm going to turn to you first. I think, the competition between Singapore and Hong Kong is often highlighted, and that's across TradFi as well as digital assets. But how can these two hubs collaborate to build a stronger and more integrated digital asset ecosystem for Asia?
I always smile when people bring up the competition between Hong Kong and Singapore. I look at us more like brothers. We are both financial hub, very important for Asia's economy, and we are also both massive trading hubs historically. So given the DNA of our jurisdictions, it's actually much more of a collaboration than competition. Now, if you think about what I mentioned before earlier, there is a reason why both jurisdictions allow, at least from the framework perspective, allow for multi-currency issuance because of that trade approach, right? So if you have different currencies that are part of a trade flow, then it naturally makes sense to have understanding and reciprocity arrangements between these stablecoins. And right now, that doesn't exactly exist, right? That mutual recognition is not in place. So the problem then becomes where a licensed stablecoin in one jurisdiction doesn't mean it's licensed in another. So you can't exactly just force your way and say, hey, you know what, it's a wallet-to-wallet transaction, close your eyes and off you go. You can't do that anymore with all these frameworks being put in place. So I know both regulators have brought up the notion of mutual recognition, at least from a discussion point perspective, a number of times. I think it just doesn't have a common ground to stand on yet. But if there's any place to actually have or come up with the initial phases of having a mutual recognition regime, that must be Hong Kong and Singapore. Just given who we are, the financial hub, financial center DNA, the trade hub DNA, and the fact that our policy frameworks are quite similar in that sense.
Yeah, that's a great point. And you absolutely need some form of recognition to preserve the fungibility of stablecoins, right? Otherwise, you're just building walled gardens and recreating the inefficiencies that we have today. Angela, Chengyi, if I can turn to you now, what is the most significant hurdle to achieving some form of regulatory harmonization across Asia? And what steps can regulators like the MAS and the SFC and the HKMA take to overcome it?
I think, there is still some unevenness to the pace of regulatory clarity across Asia, especially when we talk about a larger set of countries. But that said, we do see regulation coming online in places like Vietnam, which is also a really fast-growing market. And I think, at the end of the day, when you want to have mutual recognition, you want to have equivalence, you need to have frameworks in order to have this mutual recognition. And I think this is something that we've been struggling with even in traditional financial markets for a long time, right? But ending my answer on a bit of a positive note, I think what steps can be taken. We have really global regulatory leaders, jurisdictions like Singapore, Hong Kong, and Japan, and I think I hope to see kind of more global and regional leadership from these jurisdictions in terms of helping to shape crypto regulation in the region and globally, and engendering these discussions around a greater harmonization, because honestly, it's a really tricky topic, right? Equivalence and harmonization, but I think nowhere is it more needed than in digital assets, which is an inherently borderless asset class.
Yeah, I fully agree. And at the end of the day, so Angela and I are both like ex-regulators, and from the regulatory perspective, I don't think we're ever going to see full harmonization. What we can hope for is minimum standards, common minimum standards, which different regulators will then sort of tweak at the edges in order to match their domestic context and their domestic risk appetite. That continues to be their prerogative. And so I think to a certain extent, that is something that we will have to live with. A degree of fragmentation is an intended consequence. The hope is that there are no sort of inconsistencies, that there is sufficient commonality, that global business models are able to, with the right investment, continue to operate across borders in a relatively seamless way. And like I think Angela was 100% right in sort of pointing out the uneven regulatory landscape across Asia. I think there's still a lot of work that can be done. And a lot of that comes in the form of, capacity development to jurisdictions that are still sort of building out their regimes. A lot of that is done even on a very practical level by regulators with each other. And so supporting that continued work, I think, is going to be key. We need to get regulatory regimes in place in more jurisdictions before we can talk about harmonization of those regimes on a broader regional basis.
Yeah, that's a great point. If you can't really harmonize if you have nothing to harmonize with, right? We're down to our last 5 minutes. So before we close, I'd love to hear some thoughts from my panel on the future state for Singapore and Hong Kong. So just very quickly, maybe in just 1 minute, in 5 years, what do you think a successful and thriving digital asset ecosystem in Singapore and Hong Kong looks like from a regulatory perspective? And what would be considered a failure?
I will start. I'll touch on the point that I made earlier that Hong Kong realistically is a regulatory sandbox for Greater China. And there has been still lots of questions around what's the stance from China's perspective. Most people recognize that China has, in some sense, banned crypto over the last few years from a crypto trading perspective, crypto mining and so on and so forth. Ownership, however, of digital asset is still allowed, right? So there's some misconceptions there as well. But at the end of the day, when you have the second largest economy in the world that are heavily looking into blockchain and has been putting blockchain as part of the national strategy, and by the way, the eve of the 5-year cycle is coming up. So I think that there's going to be a lot of eyes on how it's going to shape and whether digital asset is going to take even more of a central theme in the next 5 years strategy for China perspective. That's going to be quite critical to look at. So I think Hong Kong is that tip of the spear, so to speak, from a Greater China perspective. How we interact, how we regulate, how we policy make is going to be a leading example of how you potentially can look at how the rest of China is going to operate, especially when you start to see, additional new economic zones that China might be carving out. There's talks about Hainan Island being one of those new zones. And would digital assets and stablecoin and crypto play a role in that? Remains to be seen.
Thanks, Sean. Angela, perhaps over to you.
Yeah, I think to keep it short, if we're still talking about Singapore and Hong Kong as crypto hubs in 5 years, I would consider that to be a success. And let's face it, regulation is only one facet of that, but it's very important. And the other thing I think is the industry engagement with the regulators. And I think it's been ongoing. I hope that it will continue. And another success factor is if the regulators feel comfortable enough to take an even more positive tone to supporting the development of the industry.
Just to hop over to Singapore, we always consider the MA as a front runner in terms of building regulatory frameworks around digital assets, but there are a number of specific issues on which they've kind of said, well, it's still early. We'll, cross the river by feeling the stones. And these are, this is where we've got to, and our thinking could change. And that's things around like allowing multi-jurisdiction issuance for stablecoin issuers, or, allowing access to staking and sort of DeFi services. And it's quite clear that, the regulators feel like they're still sort of building knowledge there in order to figure out what the right rules to set, and they're erring on the side of conservatism. And so I think if over the next few years we see those rules being, I guess, relaxed in a nuanced way that reflects that understanding and that comfort with the different facets of the crypto ecosystem, that would be a success in my book.
Thank you so much, Chengyi. I think that brings us to the close. If I could just summarize the 3 sort of takeaways that I see from this discussion. The first is that Hong Kong and Singapore are broadly aligned from a principles perspective. While other jurisdictions might be developing their own frameworks, there is the broader geopolitical tensions that we have to factor in. And the regulatory perimeter is constantly evolving. As Sean said, right? Everyone is crossing the river while they're feeling the stones. We don't know what that future state looks like, but it's an iterative process. You're building towards that. So it remains for me to thank the panel, Angela, Chengyi, Sean. Thank you so much for sharing your insights. And I'll take it back to Alec. Thank you once again for joining us.
Thank you, Rahul.
Thank you.
A big thank you to our panelists from Singapore and Hong Kong.